Hello there, and welcome to the latest episode of Mondays with Matthew. Over the past few weeks, I've been asked by a number of people to offer my opinions concerning the current health of the residential mortgage market as we move through this period of significant economic turbulence. Of course, this is a very big topic to cover, so my intent is to break it down and address different segments over the course of the next 2 weeks. Today, I will address substantial changes that have taken place in the jumbo mortgage market. And next week, I will offer my take on conventional mortgages and provide my latest forecast for mortgage rates for the balance of 2020. All right, so what's going on with the jumbo mortgage market today? It is quite likely that you may have heard all kinds of mumblings from people both inside and out of the mortgage world who are very concerned about a possible collapse in this arena. I will start out by saying there have been some significant changes in this space, but the jumbo mortgage market is just evolving. It has not collapsed. Although a vast majority of people watching this video are fully versed regarding jumbo mortgages, I do have some followers who are not in the real estate industry, so I will ask you to bear with me just a moment while I briefly explain what jumbo mortgages actually are. Well, these types of mortgages are considered a type of a non-conforming loan, which means they are not guaranteed by the government-sponsored entities, or GSEs, known as Fannie Mae, Freddie Mac, or Ginnie Mae. The reason for this is because of the high loan amount. Now, when any mortgage is created, it is grouped with lots of other mortgages and securitized. Now, securitization is nothing more than a fancy name for packaged up. And then these mortgages are sold to outside investors as what's known as mortgage-backed securities, or MBS. Now, buyers of these securities make money on the interest paid by the homeowner over time. So, what's changed? Well, today, and as we are all painfully aware, a significant percentage of the US economy is frozen due to the COVID-19 virus. Businesses are either being forced to shutter, or companies that are allowed to remain open seeing significant contractions in their business activity. Because of this, a large number of workers are either being furloughed or laid off completely, and that has consequences, with the potential for homeowners who have lost their jobs, either temporarily or permanently, being unable to keep up their mortgage payments. The government, being aware of the massive number of job losses, has offered something called forbearance, where a homeowner can, for a period of time, not make their mortgage payment with no penalty. Now, in this situation, even with the homeowner not making their mortgage payments, the bondholder is still assured to get paid what they are owed, but only when the loan is guaranteed by one of the GSEs, Fannie, Freddie, or Ginnie. Well, this, should we call, safety net of government support does not apply to securitized jumbo loans. So what does this all mean? On one side of the equation, demand for jumbo MBS product from investors has dropped significantly because of the heightened risk of the investor not being paid if the homeowner stops making mortgage payments. Now, I would add that even with jumbo MBS products, the bondholder should be paid, but bondholders themselves are worried that non-bank mortgage companies who wrote the mortgages in the first place will not have the capital reserves to cover these payments. Because of these concerns, bond buyers, naturally, have turned their attention to MBSs that are guaranteed by the GSEs, where they can be assured themselves of being paid. Now, on the other side of the equation, mortgage companies that write jumbo loans are very fearful that they won't be able to find an investor to buy them. And they're also concerned that they themselves will be on the hook to the bondholder if the homeowner stops making their mortgage payments. Now, I do have to make it crystal clear that the jumbo market has not disappeared entirely. As of April 3rd, there are still some mortgage brokers out there that are offering this product. but there are also a number who have suspended this program either temporarily or permanently because of the reasons I have just described. Additionally, there are also a number of traditional banks who are still offering jumbo loans. So, to conclude, the jumbo market has not imploded, but economic uncertainty has led to fewer players in that space today. And as we move forward, and for those banks and mortgage brokers that remain, I expect to see loan guidelines regarding debt to income, credit quality, as well as the interest rate that is being asked to change fairly often for as long as market volatility continues. This will also be true of the number of investors in jumbo MBS product. There are some that will remain, others that will float out from it with the possibility of coming back at a later date. The jumbo mortgage market is very important, especially in regions where home prices are high. Economic uncertainty has led to some paralysis, that is true, but this type of product is still available to buyers that need it. However, I do not expect to see a rebound in the number of companies, mortgage brokers and banks offering jumbo loans even when the economy has healed. So that's my take on the jumbo mortgage market. It is changing to meet current challenges, but it has not gone away. I hope that you found some value in my comments today and that you will choose to join me again next week when I will take on the topic of mortgage rates and where you can expect to see them move through the balance of this year. Stay safe out there, and I look forward to visiting with you all again next week.